Talking a little bit more news here. We're going to have a good story to talk about, and that is that retail healthcare is creating new real estate opportunities. We're seeing a move away from the standalone medical campuses. We're seeing healthcare providers moving into retail spaces. They're trying to take a benefit of the foot traffic, the convenience, the accessibility. We're seeing them in competition with bricks and mortar retailers. This is triggering a race for premium retail space. It's making the retail landscape a big player in healthcare. That's pharmacies, it's grocery stores, it's pop-up clinics. Those are becoming the center for healthcare service. This is really about providing convenience, accessibility, an experience that's more retail friendly, more consumer friendly. And this is driving up an increase in demand for retail space. Really kind of a new dynamic here that a lot of players who were dismissing retail as dead didn't see coming. Your thoughts on this new trend we're seeing?
Well, you started by saying sexability, and I started thinking you got to be careful with that in retail shopping centers. I mean, I know some NFL owners that may have gotten arrested for doing some sexability in a retail shopping center. But it's interesting that you say that because some of the properties that we own are in Miami and have a lot of medical tenancy. And as part of what we do in our research to keep those tenants happy and attract new medical tenants is look what else is in the market. And some of the competition that we've been seeing has been these strip centers that are opening up their spaces and trying to do storefront medical and retail. So it is a trend that we're aware of and that we're seeing. Part of the issue that we're finding our competitors have is that the glass storefront, it's not attractive. The tenants are finding that pedestrians don't like going in and out of it. The visibility is not as great as they'd like. The foot traffic is not what they anticipated being. It's not like going into a super mega mall and going into a former Sears big block. And even then, if I'm going to the doctor, do I want to walk through the food court, which probably screws up my fasting before my blood work, or the clothing stores that I might want to stop and impulse shop or any of that stuff? Or, let's say it's a different type of medical clinic that you don't want people to know about, and you're walking past everyone to get there. I mean, there's a lot of things that go into it, but I'm
I
kind of
think that's
rambling.
the
So
accessibility. Is that what
there you
you're
go.
talking about there?
That could be it.
It's interesting. I'll add to that. I don't think I really considered it from the side of foot traffic, and I actually don't know that I think I can see some of it, maybe because it gives somebody some notoriety, like, hey, we're here. This is what we do, but we're in a retail center. So, to Zach's point, you may not have people that want to share their health to the world and let them know, just from the off chance of they may run into somebody. And the other side is from a truly retail asset perspective, you're talking about triple net leases. You're talking about retailers that have prime space that may or may not want to divide up space. So now you're getting more space than you need. You're paying more in a price per square foot than you need. Blah blah blah. It goes on and on and on. I get it. I get it for maybe even like podiatrists, things like that. But true healthcare, I think you're talking like urgent care more than true specialized healthcare.
Yeah, well,
Yeah.
I'm actually the area I'm living is bit older than most, a bit more affluent than most, and I'm really seeing in my neighborhood. I'm seeing a lot of medical popping up and largely premium spaces, sometimes entirely new spaces. But the look and feel is different than what you think of it in terms of a mall. This really doesn't
Yeah.
work in terms of taking like your common space or your low end space. We're really talking about new builds here, premium spaces. They're spending the capex to reconfigure stuff. One of the things I would say here is it really proves that old adage of if you want to make money, follow the baby boomers, right? That it's a giant generation and it's always driven consumer trends and spending. And as they age, we're just going to see more of this. We're going to see healthcare be a bigger proportion, and real estate's not going to be an exception. So I know it's something we do when we look at properties. We look at the demographics, and if anything, this just makes what we're already doing more important. Even more important to understand your demographics, age, affluence, population, and I think what you're going to see is those areas with really positive demographics in terms of consumers with money to spend are going to be doing well, but we're just going to see some of the mix of services shift more to healthcare in some of these areas that are have an older population in them. This is actually a little bit more of an opinion piece. This is looks like we lost Jeff. I don't think he likes this already. Oh, there he's back. We'll keep going. This
Sorry.
was an opinion piece
You
from
already
Peter
offended him. He
Zihan.
didn't even know what it is.
Yeah. Peter Zihan's a pretty famous geopolitical international relations commentator. And Peter was making the point that there's a triple challenge. What do you call it? A three-headed dragon for New York real estate. I guess three-headed dragon sounds more ominous or scary or something like that. But the three heads he pointed out was one, demographics. The American Northeast is the oldest and fastest aging population in the U.S. New Yorkers are retiring and they're moving to warmer and cheaper climates. So that's really kind of driving down demand in New York. Then he pointed out to remote work is leading employees relocating to other areas, including Florida, and in some cases just commuting a few times a month. With 8% of the population, New York paying 90% of the taxes, any relocation of upper wage earners is a real problem for that government in terms of the fiscal hit they're taking. And then the third head of the dragon he was pointing out to was the problem of foreigners land banking, basically. Foreigners, as things get more dangerous or more unrest, we've talked about Chinese money laundering separately into real estate, but foreigners are buying apartments like in those pencil skyscrapers that they never live in just to get the money out. And that creates the problem of distorting the real estate market in that you have foreigners who, yeah, they bought the property, but they're not living there, so they're not paying all the taxes, the retail taxes, the income taxes into the system. So he pointed these as three real problems for the private sector and government business model in New York. Didn't offer any solutions, but he said, hey, these are three problems. I think personally, I think he's got a point in terms of these are problems. We've definitely seen them. Some thoughts you guys have. I got some of my own
I-
thoughts on this one.
is this like another like hashtag San Francisco type thing? Like, or is this a are we looking at are we discussing mass migration? I mean, I think to a large degree we are.
I
I
think
you
it's
know I,
I think even in the video he might have made that allusion and said it's not as bad or whatnot. But that was going to be one of my points that he did not bring up public policy. I don't think it's a crazy coincidence that some of the areas with poor public policy that have seen increases in crime, a drop in quality of life, whether you're looking at San Francisco or New York or Chicago or Seattle, are also markets that are having these problems, while places like Miami that actually have a pretty good quality of life and have managed those problems are seeing experience upticks. I mean, we like the
That's
Savannah Charleston area. So I think public policy is, I'd say that's actually another head to this dragon, but one that's easier to fix than say demographics.
yeah.
But your guys'
Look,
thoughts.
I mean, there's one thing that you can't do in New York City, and that's kind of change the weather. So, I mean, people found out that they just like warm weather. They like beaches. I mean, it's nice not to be inside in the winter and to kind of enjoy the space. I mean, maybe a solution is they put a beach on the Hudson. I mean, no one will go, but you could always do that. I mean, that'd be very interesting.
isn't there a chemical cleanup requirement for that?
Well, I mean, I
Or
remember Seinfeld where Kramer was swimming in it. He came out and like he was like a mutant. So I was
yeah,
like, I don't know if I'd go to the beach, but I mean, hey, you might put one in. Maybe it
You know,
keeps some people.
I'm gonna bang the drum on public policy because I think especially when you talk about that like 8% paying 90% of the taxes, that 8%. Um, if they want to hang out in Miami, they can fly there. If they want to be somewhere else, and they're going back and forth. And I think that was really one of the issues here is that for those people that had multiple houses or multiple properties or already spending one time in one area and one time in another, once things got to the point where, you know what, the quality of life is just better in X and Y. They're like, well, I'm already spending some time in Miami. I'll just make that permanent. For the group that's paying most of the taxes, they have so much mobility that if you make it so life isn't that enjoyable, they're gone. And,
well
and, and I
let's
think the good news there is that is fixable. You can make it so it's you want to spend more time where there's the Broadway shows and the best restaurants and everything. If you make it so people aren't seeing so much of the downside in their face, that they're not scared to death to ride the subway. Not that the top eight,
Well, I
top,
think you, you,
1% is riding the subway.
you hit a couple things, and actually, it's like, why not summer in the Northeast where it's still warm but a little cooler? Why not winter for 6 months and 5 days? And in Florida where you're paying less taxes, and oh, by the way, you also have some of the best doctors in the world. We were discussing healthcare in a recent video, but let's be honest, healthcare tourism is a real thing. So if you can spend your winter, get all of your healthcare items taken care of in a tax-free state, wouldn't you do it?
Yeah, I
Yeah.
honestly, this would be my criticism of Peter, is I think this is the big point he was missing on some of this, is that if you can fix your public policy and get your quality of life back to where it was with, Bloomberg or Giuliani, and I'm not pitching either of those guys. I'm just pitching that the city had a higher quality of life for whatever reason while they were there. If I think if New York can get back to cleaning up the streets and making it a place where it's just safer, it's cleaner, turn back the clock a little bit, a lot of these people will stay or be there, or make it more their permanent residence, and then do exactly that. They'll when it's more comfortable to be in Miami, they'll be in Miami, because that's what they were doing before the quality of life went down. The other thing I'm going to
Huh.
bring up is on the whole pencil skyscraper thing. Just clamp down on the money laundering. Just I think that will start to address building these, like, ridiculous buildings that nobody lives in, that are just there for foreigners to park their money, and does distort the city's economy by having people who aren't paying the taxes, aren't part of the city life, who are just parking money. I think if you actually start treating money laundering seriously, and say, especially for stuff that's linked to crime and whatnot, we just don't want it. That'll take care of that problem in large
Or,
degree.
or they figure out who the owners are and force them to live there in some way, shape, or form, which is probably what New York City will do. And they'll make it. If they don't, they'll pay higher taxes.
I was going to
Um,
say, make it a tax, just
I mean, it's
penalize, and it's tax revenue. They don't have to live there. It's kind of what you want anyway. So, I mean, they'd be happy to probably pay the tax and keep leaving it vacant. It
yeah,
accomplishes the same goal.
Great.
kind
I,
of.
I think
I'm not
I
saying it's a good solution.
no, I think it's a
It
great
is our
solution.
solution.
I personally think we have fixed the problem, gentlemen. I think we've
Yeah,
come up with this. Now we'll see if there's much interest in actually implementing these solutions, because there hasn't been a ton. But I
so
do think that's kind of a path forward. In the meantime, we will keep doing investments in those areas where people are fleeing to, and have higher quality of life, have better demographic data behind them. We're happy to do stuff in the Miami area, and the Savannah Charleston area, and in other areas that are benefiting from these mistakes. In this case, it's employees headed back to the office. This is a recent study from Unispace that found that 72% of employers worldwide have return to office mandates in place. It's no longer a request or a pretty please. In the
yeah, but
last
Steve,
two,
I thought Office died.
yeah, well, apparently it's come back from the grave. Unispace is reporting 75% of companies increased their commercial real estate footprint in the last 2 years. But
Wow.
employees are not thrilled, with 51% being reluctant to return. But apparently, the tougher job market is giving employers more power here. And also the fact that it's tough for them to sell or sublease the office space. So now they've got this asset on the books that they need to use or not get any value whatsoever out of. We're not surprised that office isn't dead. But a few of your thoughts now that we're starting to see some data backing that up.
Look, I think the truth is that we've said it a
It's
billion
about
times.
damn time.
Yeah, and we've said it a billion times. Office didn't die. Yeah, it's changed some, sure. Ironically, you hit something. Is not only did they not get rid of their footprint, they increased their footprint. And that's because they're trying to look at the health standards of their employees. Like, maybe we're getting more space, maybe they're getting bigger offices so that they feel like they are at home and they have some flexibility. They're not confined to a small space with no window. I mean,
You know,
there's
I
a
would,
lot of
Well,
yeah.
reasons.
Go on,
I
Zach.
mean, we were, I think, talking about this years ago during, the heights of the pandemic, 2020 and 21. And Ian, what came out of that was the co-working space, we'll split time where one employee's in, another employee's out, and then they'll swap. It was all, no one wants to share the same space anymore. Everyone needs their own space, right? So I can have a desk for you, and then Steve, I can have a desk for you, and then I need a desk for myself. And each one of us might only be in the office 3 days a week, but there's no sharing. You need more space. You have to house these people and make them happy where they're comfortable coming in for their own health
Well,
and their own mentally and
Well,
physically.
I want to build on that because I think that's a great point because you listen to a lot of the news articles and what you think is there was a sudden shift to people not coming in the office. That's not true. Some of this was focused more on the bigger companies, certain portions of the economy, but even with those companies, it was much more of a shift to hybrid. Them not coming in as much, which gets to your point. If they're still coming in, they still want their space, and hybrid was never going to save as much space as the percentage occupancy would suggest it would for exactly the reasons you're throwing out. The other thing I would say this particular study didn't touch upon uh, but I think we're having here is that move to the suburbs. I mean, that's certainly what I'm seeing in Silicon Valley is San Francisco's really gotten hit hard, but the suburbs are doing pretty well. And I think that's partly of the millennials getting older, doing family formation. It was fun in your single years to be in urban cores. So there, I've been beating the drum also on social policy, making some of those urban centers less fun to be in. I think that's true, but I think we are also seeing a move to the suburbs, a different office, an office that maybe is more multi-use, is maybe an easier commute. And maybe you're not in it as much, and I think some of these workplaces want to also have an office that's more attuned to those employees. So I think we're seeing changes in office, but no, it's not dead.
Well, I'd add to it just to your San Francisco comment. Maybe it's that people just don't need a bajillion-dollar office to house their tech company. They could use less, get more, and still provide the same amenity base. And maybe somebody's got to drive there, but I think to some degree, maybe it's still a business. You still want your employees to be happy, but it's still a business, and you gotta be efficient. And interestingly, in saying the efficiency side, having one person in and then one person the next week, those two people are probably collaborating on projects, and you create some inefficiency by always laddering when somebody's in and when somebody's out.
Well,
You know,
I'll leave you with one other thought or one last thought that I had, and it's an old thought, and sometimes the old ones are the best ones. But it was called third space, right? Third space was originally where you're at home and you're at work, and where's your third space? And it was a retail term. It was like your Starbucks or your store or anything. It
yeah,
was experiential.
yeah.
That's what people want. They want a third space. At this point, they want a second space. They realize how much they like the third space. They no longer want to go to the second space. Hell, I don't even know what happens to residential if people don't start building cooler houses. But the second space, the office, it doesn't die, but you change it. You make it more experiential. You make it better. You make it fun. You throw the dollars at it, and that's why suburban works, right? Because they're building those spaces. They're throwing the dollars at it, and people want to drive from their house to their office that is closer by, that's easier to get to, and has some of these newer and nicer amenities that people aren't throwing the money downtown.
Well, it also just dawned on me as well. Theoretically, the discussion of you employees being mad about going back to the office. Well, you to some degree, if you think about it, if you're always working from home, there's no way for you to ever leave your work. At some point, you can't just say, "Hey, sorry, I'm not at the office. Hey, I'm sorry, I don't have my computer. Hey, I'm sorry, I'm not working." And it basically becomes rude because you're telling some client, "Screw you, I'm not going to do it because I just don't feel like it."
Well, I think, what I really would really go to that is going to be something that's just driving everything is quality of life. I mean, I'm always using those words, but I think this really comes down to people like flexibility, people like convenience. Jeff, I talked last week about a story about a New York office building that went for a very good, solid price, but it was premium property, and we're seeing some of the lower end stuff really get beat up. I think we're just going to be in a world where, you know, amenities matter, quality matters. And if you don't pick properties that score pretty high, you could be in some trouble because I think that the days of just stuffing people in a lot of boxes, those days are gone. It's high-end properties are going to be able to work. Properties like what you're pointing to, Zach, where there's a lot of different amenities, the flexibility is going to matter. I think those are really the bigger drivers rather than some simple story of everybody's going to be working from now on. It's forgive the language, it's just BS. There's a lot of factors that go into here, but I think we
Forgive,
could almost put
forgive
all
your
of it under
language, Steve.
quality of life. Yeah.
You
Well,
use two letters. You didn't even say a bad word. Like, sorry,
Yeah.
I'm going to say P and Q right now. It's like,
yeah,
oh my
I don't
gosh.
want a YouTube algorithms getting angry at me if I start talking the way I have about some property deals we're working, guys. So I'm trying to be a good boy here.
Well, let's be
Um,
honest though, too. The other side is, is monetary efficiency from the side of these businesses. They can get a lot more with less and get more amenities like you're talking. Why not go to suburban? Why be in New
yeah.
York City if you don't need to?
Well,
Yeah.
that's the point. Your rate per square foot. I mean, I'm allowed to put more of my own money as the tenant into the space because I'm not paying 40, 50, 60 bucks a foot. I'm paying 20, 30, 40 bucks. So I'm comfortable spending this money, making my space better for me and for my employer. So there is a big push that we're seeing, and it seems to make a lot of sense.
Yeah. Thanks a lot, guys. Appreciate it. This one is the growth in the ultra luxury market. That's homes going for over $10 million. We saw a big jump with COVID transactions more than doubling from 2020 to 2021, up to 2,300 properties sold in this class. In 2022, we were still above that 20 level with almost 18. I'm sorry, that was about 1,780 almost sold. Um, Typically, at least from this news story, that's San Francisco, LA, New York City that are usually driving that volume. But we've seen a big jump in like the Palm Beach, Miami markets you guys are familiar with that have always had a bit of this, Austin, and then some new ultra luxury markets according to this article, like Brooklyn, North Florida, Boulder, Dallas, Fort Worth, Central Florida, the East Bay. Anyhow, just your thoughts on the growth we've seen post COVID in the ultra luxury residential home market.
I don't think it's post COVID. I think that our article probably should go back and dig a little deeper. So my experience, and Jeff will probably talk about it as well. Palm Beach and Jupiter Island and Naples have always had 20, 30, $40 million plus properties since the beginning. I mean, 20, 30 years ago, they had properties that expensive. These days they're 80, $100 million. I mean, it's, you know, everything else pales in comparison. I'm trying to think about how I wanted to phrase that without sounding like a jackass. But some of the other areas that
Difficult.
they're missing. I know anything that comes out of my mouth, right? So they missed like Sarasota. That's not on the radar. Sarasota's 12 to 1,500 a foot, up to 2,000 a foot. Some of the condos there on the top floors are 40 to 60 million dollars right now.
Naples.
What about St. Petersburg, right outside Tampa? St. Petersburg, again, downtown, they have high-rise buildings, and this is post-COVID. The pre-COVID numbers were about 80% of that. So, I mean, pre-COVID, that $40 million condo was about 30 to 32 million bucks. And I've been in those areas for a long time, and I've been pulling that real estate. I've got a house over there, so it's been a lot higher and in a lot more diverse areas, at least in Florida and in the Southeast, than this article is pointing out. But I think that trend is here to stay. And as people have been making more money and figuring out different areas that they want to live with COVID and more space like that, they've been deciding, I'm going to put more money into my house than I've ever done in the last 10 or 20 years. And I don't see that trend going away. I think it accelerates.
Yeah, I
Yeah.
mean, go on, Jeff.
God, no, good.
Yeah, what I was going to point out is I think this kind of captures two really big trends. One's the wealth gap, right? I mean, this has been going on for a while. That we're seeing that kind of 1% of 1% get an increased amount of the money, do disproportionately well to other folks, and you can talk about a lot of different reasons for why that's going on. But it's hard to argue that it's not going on. That that there's this billionaire class that has done very, very well and done better than other folks, and they got to live somewhere, and that's what's going to drive this 10 million plus market. The other thing I would say that's going to drive this and doesn't look like it's going to change either is if you're very, very wealthy overseas, there's a lot of very, very wealthy people overseas that look at the US and say, that looks safe. That looks like a place where I don't have to worry about getting thrown in jail because I got on the wrong side of things. That looks like a place where I don't have to worry about the government waking up one day and saying we're seizing all private property. I think the U.S. has been and is going to remain a safe haven for global wealth. And that's particularly attractive to people in parts of the world where, their situation in a year, a month, or a day could change to where they're looking to be somewhere else.
Yeah, probably don't need to add a whole lot. The only side I might add, Zach had mentioned Jupiter Island, Palm Beach Island. And he's right. There's always been a large contingency there of, former, not just, Fortune 500, but Fortune 100, Fortune 50, uh, you know, now retired CEOs that are living in those areas on really larger properties. The only thing I might add is maybe what is occurring now is people who are moving from the Northeast are more willing to buy something for $10 million plus because they can afford it, that isn't as big as what the previous owner had, and cut it into two, and now you've got two properties that were on the same size as one previously that you're paying 30 or $40 million for. I could see that side. I think there's a lot that goes into it, that creates a new dynamic to it. But let's not forget that it's Florida. The weather makes it easier for people to want to come down here. People complain about hurricanes. Yeah, there's hurricanes, but it's not. In my mind, maybe it's not as bad as earthquakes. Maybe it's not as bad as somebody's taxes in the Northeast. There's a lot that goes into it.
And this is one I don't really have data behind, but I'm going to toss out there because I do think it's going on, and that's the digital age. I think it's just easier, if you're a billionaire, to be wherever you want or be in multiple locations wherever you want and still get business done. You don't have to be in Manhattan or London. Yeah.
You don't even have to be a billionaire. And it just dawned on me that my two partners are forgetting that we were in the middle of building some luxury, I'll call them townhouses.
Oh, I didn't forget. I just didn't mention it.
They were 5,000 square foot each. There was two of them. We were buying a broken development deal, and that deal was going to go to us for the land for $6 million, and we were going to build the townhouses for another 5 to finish them off. And it was about 11, and we were looking to sell them for about 14 to 16 million bucks, about $7 to $8 million a piece. So we ended up passing on the deal, and those numbers sound outrageous, by the way, when you're building stuff, but we ended up passing on the deal. And they ended up pre-selling for 100% proceeds. I mean, cash in escrow, not like a deposit, for 8.5 each. And upon closing, and this is pre-COVID, mind you, and upon closing, they moved in, and less than a year later, they each sold for over $11 million each. I don't even want to know what happened post-COVID to those units, because that's an astronomical deal for a townhouse. And those people are not billionaires, and that's what you're seeing. It's 100 millionaires. It's affluent people that they can fly wherever they want. They can work from wherever they want, and that's what you're seeing too. So I mean, there's another aspect of the article that was missed.
I think you just hit something as well that you triggered and reminded me is the areas we're discussing. Let's just say it's Palm Beach Island, it's Ponte Vedra, it's all the areas in Miami and Fort Lauderdale, Naples. They're all near, if not real close to international airports.
Yep.
That you can let's Palm Beach Island, you can be in Miami in an hour and a half to catch a flight that you may not be able to catch out of Palm Beach or Fort Lauderdale. If you're in Ponte Vedra, you can go to Jacksonville, you can go to Orlando. If you're in St. Petersburg, theoretically, or let's just make it easier, say Sarasota, you can go south to Fort Myers, you can go north
Tampa
to
International's right there.
and you can also go to Orlando.
Before we close this one off, we just talked about a story in terms of New York having problems. I think this goes right to that, is that we've now got a class of very affluent people They can live and work wherever they want. And I would argue that if your area starts screwing up the quality of life, that tax base is going to be gone in a heartbeat. And I think that's a new reality that politicians have not grasped yet. And I think we're going to be talking about some of that and the implications of this very affluent, multimillionaire, billionaire class that they're having, not just on residential, but by a side effect also commercial, where you put the offices and everything else.
Well, interestingly enough, maybe you hit something. Maybe it's not just the very affluent class that's moving out of those areas. Maybe it's those officials who live and work in those areas, but also live and work somewhere else.
Uh-huh.
That's
Political corruption. Like
uh,
throwing that in right at the end.
we will have to follow up on that story. Thanks a lot, gentlemen.